Here is the story the closing bell is telling. The market got scared this morning, and then it changed its mind about almost everything except one company. NVIDIA is in talks to guarantee up to $250 billion of financing for OpenAI's data centers, and Bloomberg reported that NVIDIA's own credit risk widened in the swaps market because of it. Traders stopped reading that guarantee as a moat and started reading it as a liability. The chip complex was liquidated, AMD down 8%, the leveraged semiconductor fund swinging 18% from its high to its low. But then look what happened in the afternoon. That leveraged chip fund rallied 12% off its low. The triple-leveraged NASDAQ fund round-tripped from 66 down to 61 and back to 63, finishing essentially flat. Oil crashed 8% as the U.S. paused strikes on Iran, which is good news for the federal. The tape healed. NVIDIA did not. It bounced barely 1% off its low and stays down 4.5%. When the whole neighborhood recovers and only one house is still burning, the fire is in that house. Alphabet is the system's one cued name, and it deserves an honest description rather than a flattering one. It rose 2.5% today to $327 while the chip complex was being sold, because money is rotating out of whoever pays for the AI build-out and into whoever monetizes it. But Alphabet is not unscathed. This is the name that took the system's stop this morning, and the afternoon made the case for staying away much stronger. The setup: NVIDIA is negotiating to guarantee $250 billion of financing for OpenAI's build-out, for a borrower with no investment-grade rating. This morning's bull framing was that credit is NVIDIA's next product, a moat no rival can match. By midday, the market had voted the other way, and Bloomberg reported NVIDIA's credit risk widening in the swaps market. Earns Wednesday, July 29th, the same day as the FOMC. Double event risk sitting inside any 11 to 13-day hold. Strongest tape in the book today, plus 2.5% to 391.29, high 394.20, defying the chip route, with resistance flag near 395.50, and it is now the direct capex referendum. Alphabet just set the bar for. Benzinga's hyperscaler tracker has GOOG/MSFT/Meta racing toward $1T of annual AI infrastructure spend. Earns Thursday, July 30th. AWS the focus. With GDP+PCE the same morning, Benzinga frames it as a prove-it moment on whether AI data center spend scales without crushing free cash flow. Mechanically, this is the closest thing to a live trigger in the entire book, and I still will not take it. Close 232.52 is only 0.38% under the 233.40 lower band. And RSI, 6, jumped 25.338.2 in a single bar, so both legs are genuinely in motion for the first time in days. The dead cat bounce finished fading. 313.52 open, 316.89 high, 308.34 last, minus 1.5%, and closing near the low while the rest of the tape recovered. No trigger on either arm. Close sits 6.9% above its lower band, 286.48, so the Mr. Arm has nothing to reclaim, and priced 307.61 versus very slow SMA. 362.95 blocks the trend arm for months. RSI, 6, 26.3 and now falling again from 28.7. Daily downtrend fully intact, 425, 304 since July 1st.